Hello all and welcome to Section 3, Staying Secured with Fixed Income Securities. This will be the first video, Section Overview. We will start off with an introduction to our client package, Jrv Finance. In the next video, we'll move on to Introduction to Fixed Income Securities along with some definitions. In the third video, we'll go over interest rates and compounding. In the fourth, we'll actually value a security, such as a bond. Video 5, we'll go over risk and sensitivity measures, duration, modified duration, and convexity. And lastly, we'll look at the yield curve and bootstrapping approach. These are used when dealing with valuation of fixed income securities. An introduction to Jrv Finance. As usual, we'll first start off with installation, then looking at the overview, as well as some examples of functions that will be used throughout the section. Here is the overview or the vignette of the package Jrv Finance. There are multiple useful functions within this package for bond pricing. As mentioned, this is used for financial spreadsheet-based tasks in R, valuing bonds, and risk management. Examples of useful functions are the day count conventions, year fraction and day count.actual, bond pricing, bond.tcf, bond.price, and bond.yield, as well as bond risk management, duration. Here we have the R console. Again, we start off with the basics, clearing the environment, closing graphical devices, clearing the console, setting the directory, and checking the directory. As before, we'll use the standard if statement to load the package Jrv Finance. We can also use the help function Jrv Finance. This will give examples of functions within this, such as NPV, IRR, annuities, and bond pricing. You can click on the individual functions to get further help.